Hey everyone, Dan here. Before we get into it, if you enjoy these videos, please hit the like and subscribe button. It helps a lot. And also keep in mind, these are my own thoughts, opinions, and ideas. These are not meant to be, nor should you take them as investment or trading advice in any way, shape, or form. Do your own due diligence, put in the work for yourself, and make your decisions based on that. Enjoy.
All right, folks, here we are after market close on Wednesday, January 5th. We're going to take a look at SoFi. So SoFi drawing down over 6% today. As you certainly know by now, though, the entire market was in quite a tumble, especially this afternoon. And, when there's shakeups in the market like this, a lot of times what we saw, if you remember back to last February and March, growth and, new to public market companies often take the brunt of much of that selling off and much of that fear and uncertainty. And that certainly continues to be the case this year. And SoFi, just like I said, kind of bearing the brunt of that downturn in the market and sort of the spike in fear. We can see here UVXY today, right, the same time that the plummeting happened in stocks, UVXY, which goes up when fear and selling pressure in the market rises. This rises as well. So I guess it's a fair time to mention, if you haven't seen my video on how to profit when the market is selling off or in a bear market, go to my investing and trading mini courses, or whatever it's called, the playlist on my channel, and you'll find a couple of options there for that if you have no idea how to try to profit from red days across the market. But in any case, we see the inverse chart here on SoFi. Now, comparing this to the overall market, to be honest, SoFi coming down a little over 6%, while the market itself, NASDAQ in particular, coming down over 3%. That's a pretty good sort of spread, right? SoFi coming down about double. I didn't go and check some of the others to see. Yeah, so Upstart down over 9. Affirm about the same. Lending Club down more. So it's just the case. ARKF down very similarly as well. You would expect that. That's a riskier, sort of more tech forward kind of fund. FinTech here and the FINX fared much better than the ones that we just looked at. But this is just to say SoFi is of course taking a beating here, but it's just kind of in the pack of FinTech stocks, and it's like in a bubble within a bubble, right? So the larger bubble, the macro-ish bubble, is the overall market, and it's been spooked, and there's been a lot of fears, even aside from today, fears about the market being at all-time highs and tapering coming, and increases in interest rates coming, which do also additionally hurt growth stage stocks even further. It's harder to borrow money, and people can, make decent returns elsewhere with less risk by not having to put it in the market. So, if you think of people wanting to de-risk their exposure to the market because they can make decent returns elsewhere, if they were to invest in a publicly traded stock, it's likely that they would choose maybe a safer stock or slew of stocks versus something that may have more long-term promise, that may be more disruptive. But in the near term, at least while interest rates may be higher, and again, I'm speaking in the future, if and when interest rates are higher, they would probably be less apt to jump in and say, okay, let me try to 2x, 3x, 4x my money with something like SoFi when I can just put it in Coca-Cola, something like that. But this is just to say, in these overall market forces, this is going to happen. And then even in the smaller bubble of the fintech space, SoFi is just not alone. It's just kind of moving with the market. So this is when it becomes a little bit challenging, because much of the work that you do in particular to a specific stock can be a little bit thwarted because it's just kind of getting drawn in the direction of the overall market. That said, I do still think there's advantages when the market stabilizes. That's something that maybe pulled back more than was logical or was reasonable, has a better opportunity for greater gains at that point, right? But the question is always, when does that transition come, right? Trend reversal is a challenging thing. That said, we did see it try really hard to bounce 3 times or so on this 1466 and tried to come back and reclaim it here, making it up to about 462 or 1462. So these levels still holding up really well, and then coming down here and falling within 2 cents of 1402, and now we see in the aftermarket hours, trying to come up a little bit. So SoFi being beaten down, UVXY coming down a little bit, so maybe there's going to be a little bit of a reprieve. Maybe the market overall will sort of feel like, okay, the reaction today was a bit much, and maybe we sold off too heavy and overreacted a bit, right? The market is often a series of overreactions that then kind of correct over a period of time, and when it's not exuberant and it's not in dreaded fear, the in between is sort of where you look for the most logical periods. Now, of course, I'm not super happy with the timing on this. I had added some commons a few days ago, and then added to my January 2023 $20 leap call, and just poor timing. But I mean, what are you going to do? Everything was looking fine with the stock, right? I think that the stock was looking really solid, but then, like I said, I think that these overall forces came in to kind of bite us a bit. So I'm interested to see when things stabilize, where's SoFi's price in that? Where was it able to hold given the overall structure of the larger fintech space and then of the larger market itself? And then where does it go from there? Does it come back into this trajectory, right? It was on a really nice trajectory. It was on a trajectory from 1366 to 1649, right? So almost $3, which is a really good percentage gain for a stock this low cost. And that was just over the course of 6, 7, 8, I think about 10 trading days. So about 2 weeks or so, maybe a little bit longer because of the holidays. But, I'm interested to see if it can kind of regain that momentum relatively quickly. Now, this trend line, I'm going to take it out for now. We'll see if it is able to come back into it, but that was a pretty nascent trend line anyway. It was a baby of a trend line because it was really just, okay, here's a starting point because this was the lowest point of this swing down. And then the next lowest point that was put in was here. So it was really just a confirmation of one candlestick that was able to even form the trend line, but it never reconfirmed off of there again. So to me, I'm just looking at these catch zones, right? And then depending on where it catches, where it seems to stabilize, what the overall market is doing, I'll start looking to see, okay, are we looking at making sure that we hold 1402 and pressing into 1466? I hope this isn't the case, but are we down pressing on 1308 or even lower? I really hope not, but we'll just have to see. I mean, there's a lot of changes that are potentially coming this year and next year in the market, and I certainly don't know how the market is going to absorb and sort of make sense of all of those things in a pricing perspective, or in a pricing way. So we'll just have to see. But to me at the moment, if we can hold 1402, fantastic. If we can't, we'll just kind of have to keep charting it and watching what the price does. But, this is why I try to tell folks there's no crystal ball here. There's a lot of forces at play. There's a lot of headwinds. The tailwinds come, but they are kind of few and far between and sporadic, right? Analysts upgrades, analysts putting out a price target to begin with, initiating coverage. The bank charters still like sitting out there looming, right? Earnings, right? These things all are sort of small points in time in the life cycle of this stock that's trying to accomplish, what the company is trying to accomplish, really, really big things in a very competitive space. And so there's just a lot of factors at play. But I do think overall, we were in a good spot. And so I'm interested to see what happens when the dust clears. I don't know how long that'll take or when it'll happen. And I'm also interested to sort of see what our next kind of tailwind is like, and it'll undoubtedly be brief. But is it something from an analyst? Do we have to wait until the next earnings? Will bank charter news come through? You know, what's going to come in that could sort of have a disproportionate positive impact on SoFi, whereas for the time being, the overall market state is having this negative impact, and it's just adding to the headwinds that a company in SoFi's stage would otherwise have anyway. All right, folks, I know it's a very soapboxy video. Thinking about it now, I probably should have just done this as a video and not with the chart even up, because it's I didn't talk too much about exactly what's on the chart. But 1402, let's see if it can hold that. But like I said, I will be here to continue to chart as we go, and we'll see how it holds up. All right, folks, I hope that you are holding up okay this week and that you're able to finish the week strong in the days ahead. And I appreciate you watching. I will see you in the next video.